Good morning, everybody. Welcome to the Flow Show. It is Thursday. I don't know what the date is. 23rd today. That's what the date is today. The 23rd of October, and we're barreling through the year, getting it done. Soon be Christmas. Morning, Kate.
Morning, Ryan. Morning, everybody. It's 20 Thursday.
It's what?
20 Thursday. 23rd Thursday.
Oh, okay.
Now, well, okay. That wasn't a good one. All right, then skip that one.
Yeah, I might have to share one of Michael's red cards with you for that one. He's got enough.
Keep it at yellow, please. It wasn't. It wasn't a red card offense. Come on.
Yeah. We don't need to send that one to VAR. Right. Anyway, let's get going. And only a few days remain of our 30% off sale on the Trader Funding Program. Use code SPOOKY30 to get that deal off, and I'll pop the link in the Zoom chat in a moment. But yeah, take care. That it runs out the 2nd of November, and while we're talking about that as well, that is also the time that the clocks change in the US. They change this week for UK and Europe on Sunday. They're going to go back an hour, and then we get around about a week to the 2nd of November, and then the US clock changes. Now, normally that would affect what time we get data and everything like that. But as we ain't getting none, or not a lot, we're not going to see much of that except around the PMIs and ISMs and whatnot. So just bear in mind, this weekend the clocks change. I know one of our Michael's in the chat room, Michael Wiseman. He's just decided he's going to start getting up earlier to catch some of the London session. Well, he's going to have to get up even earlier after this weekend once those clocks change. So sorry, mate, you might want to get the coffee on for that one. Anyway, that's about the clock change. That's about the TFP. So get involved in that. Last chance to do so. Right, so you'll be ready, mate. I know you will. I know you will. Right, let's get cracking. First of all, we've had China's, let's call it the notes from their fourth plenum, which is their next 5-year plan for what's going on. Nothing major in all the news. They're still the same old stuff. Going to open up, integrate, become a modern country, blah, 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 stick to their policies. No, nothing in the initial headlines I've seen that we need to worry about there that's market moving. So they're going to keep going as they are for the next 5 years, which is going to be having bum fights with Trump for another 3 of them at least. Kay, you didn't see anything in that stuff of note, did you?
No, absolutely no.
Good, we won't linger on that then.
No.
Right, over in Japan, Takeichi is off to a good start. Her cabinet approval rating is at 64.4, which is higher than both the last 2 PMs, Ishiba and Kishida, according to a Kyoto poll. So that's going well for her at the moment. She's been taken largely positively over there. We've had the biggest Japanese labour union out and about, Rengo. They're looking to seek wage hikes of over 5%, 5 or over percent in 2026, and more than a 3% base pay hike. So we're going to be doing that merry dance again, going into the spring and seeing what all the wage negotiations are going to be, whether they're going to match what they saw last year, which was about 5.25%, and then that'll be the 3rd year if we get them. We get decent wage numbers, and that'll be good for the BOJ, and that'll be good for the new government as well. Kay, should they be looking for more, or are they just keeping things slow and steady?
5% is not too bad, huh? But the thing where I'm a little surprised is that now for the past 2 years, right, we have heard that they had like 5% plus increases, but then barring a couple of months, net wages have been negative. I mean, there's something that doesn't add up in my mind, at least. even with inflation at 2.5%. How does that add up if your net wages are still negative?
Yep, that's a fair point.
Yeah,
But then
but
these,
okay. They do have a pretty big they do pay quite a few taxes and stuff, huh? I mean, withholding tax is pretty big in I think it's somewhere up in the 40s as well, maybe close to 45 or so in Japan. I mean, I forgot exactly what the numbers are. So maybe they take everything into account. It's like taxes you pay and then take away inflation. That's brings them into the negative again. But yeah, even a 5% increase every year. I haven't had 5% every year when I was when I was working for my employer.
no, but then, mate, unions is one thing, because obviously they're a base of people, whereas private sector they haven't been given as big a pay rises. So yeah, while these unions are a big deal, there's offset with the private sector. It's like NHS getting a pay rise of 5%, and
Yeah,
your man on the street doesn't. Like you say, normal people aren't getting pay rises, so there's probably an
probably.
offset with that.
That's probably the fair explanation there. Yeah.
Yeah,
Because
but,
they're not all part of unions over there.
yeah. So yeah, I mean they're
Yeah, it's
waiting for it.
probably the right explanation actually.
Yeah, they're waiting for it as much as anyone else to see pay growth go positive. But then that's the flip side for them. They wanted inflation. They've got inflation. Now they've got to deal with the consequences of inflation
Mm.
and what that means for pay as well. So yeah, that's the task that Takaichi has got. One that she's already said she's going to try and improve as well. SMB's Schlegel, speaking yesterday, said that inflation is expected to rise in the coming quarters. Economic uncertainties remain high, and the SMB will continue to observe the situation and adjust monetary policy where necessary. We also had the meeting minutes out today of their last meeting, where officials said that further easing is not appropriate. Policy is currently having an expansionary effect, and monetary policy is continuing to have a stimulative effect. Their next meeting not until December. Nothing major in those minutes that I saw anyway, Kay. And another cut still off the cards. What's it going to take for them to go again? Because their only step is now negative, isn't it?
Yeah, exactly. The thing is, with something that we can't forget is that even if they go negative in the rates, they have their tiering system where they still remunerate some of the deposits that banks and etc. And I guess in insurers and stuff, they need to have that as well. They still remunerate some of those deposits, right? But yeah, very, very lukewarm. And then we were all waiting to see if they would acknowledge that they had intervened in the month of September, when it was like kind of transpiring on the FX reserves report, because the increase of the reserves was a little too big for just to be revals in that case. So the market was speculating that they may have intervened, sit on the bid or so, but obviously they didn't say anything about it at all on the minutes. And if that's going to be the case every time we see minutes from the S&P, they may as well stop it after one.
Yeah, absolutely. Over to the ECB. ECB's Kazakhs says it may well be the case that the next rate move could as easily be a hike as a cut. He's a bit of a hawk, is Mr. Kazakhs, Kestrel Kazakhs, but he did balance off that first comment by saying there's no need to be biased to the upside or the downside, and that we are in a good place. ECB's Lagarde says we need to address fragmentation of EU trading venues. This is something that's come up in various places over the last week or so about bringing together European markets into potentially one venue. So that's something we need to keep an eye on how that develops. Over in the US, Trade Secretary or Trade Representative Greer, speaking on China trade and rare earth, says we have other deals coming up with other countries. As we know, they'd already signed one deal with Australia. Treasury Secretary Besant says CPI could come down next month or the month after. He says substantial tax refunds for Americans are expected. Says the US economy is looking good. Strong dollar policy doesn't rule out short-term swings. Says incoming Russia sanctions will be among the biggest. Says they're contemplating the next steps if China talks collapse. Kay, just want to ask about this. He's mentioned a strong dollar policy. I didn't know that was confirmed, that they had a strong dollar policy. Yeah.
I don't think. I think I kind of remember at the start when he came on that they reaffirmed it. I think they did, if I recall correctly. It was Besant who reaffirmed it. I think it's just in their book still right now. It would be a massive one if he would say the opposite. He may as well have said nothing about it, but it is. Yeah, it's a bit strange because it was clearly one of Trump's and his closest staff aims to try and get the dollar lower for their exports, but that for the time being, yeah, yeah, maybe it's a bit of a strange one that he reaffirmed it, but it's kind of a thing that is just written down there at the Treasury, and I think the bigger announcement would be that they changed the policy. But yeah, I don't have much more to say about it. The market didn't react to it, did it? At the time where he spoke, just maybe marginally. But yeah, it's
Nothing major.
no, no. I
Just
think that
while we
really the biggest thing is that they just can't get any agreement, or not even a pre-agreement, or not even a framework for something going right. He's in, where is he now? Is he already in Asia? Talk with Greer to go and talk to the Chinese again?
no, I think they're heading over there tonight or tomorrow.
Okay.
I think they're taking a wander. So yeah, we'll see what that brings. So I'm just looking at the screen. We got some comments from well, he's trade minister at the moment, but that he's going to be usurped by Motegi, I believe. He says Trump is trying. So this is Akazawa speaking, saying Trump is trying to change the world order. China's rare earth moves potentially have a major impact. Changing energy sources may put pressure on the Japanese economy, and buying energy from non-Russian sources may hike prices.
Yeah.
So a bit of
He's not
waffle
wrong there.
Yeah.
He's not wrong there. One of the things though, and I recall having we spoke about that when even when Ishiba was there, or even Kishida already, that the Japanese are trying to restart more of the nuclear plants. That is something that should perhaps just remain in the back of our mind, because I think that now that Takaichi is there, and Ishin, I think Ishin also had it on their program, if I'm not mistaken, to try and restart them earlier. So we may see some comments or some initiatives coming up pretty soon that Japan may accelerate, because now after the big quake they have such a complicated safety program to procedure in place that it takes years to restart a nuclear plant over there. So if they would change something to that approach, that may have some kind of an impact. But of course, we will have to see how fast they will come up with that plan, and how fast the safety regulations will be reduced, right?
Yeah. He also says they'll build up their US investment projects over the next 3.5 years. So a bit of a timeline on that one. Anyway, right, back to the US and Trump. He expects a broad deal with China. He also said that Putin mentioned nuclear de-escalation in prior talks. He thinks that a deal with China is possible on everything, including soybeans and possibly nuclear. Says rare earths are the least of it. And yeah, said that China may be involved in a de-escalation in nuclear talks as well. De-escalation isn't on Russia's playbook at the moment. Russia's Medvedev says the US is our opponent and peacekeeper, and Trump is on the warpath with Russia. The Russian Foreign Ministry, says there are no legal ways to take our funds, and any confiscation moves by the EU will entail a painful response from Russia. This is still a bone of contention. Europe getting ready or threatening to get ready to use frozen Russian assets to give money to Ukraine or help pay for arms for Ukraine. More sanctions have gone on. This 19th sanctions package from Europe has finally been signed off. So that's gone into play. As Hannah notes, there's been sanctions on Rosneft and Lukoil. Yes, more sanctions on those two. So those are kicking in as well. We'll see whether this does anything. Doubt it, but you never know. Right, bit of jobs news. And for all those who say that ADP isn't important, it was pretty important for the Fed because they used ADP data in helping to determine the jobs picture. Well, thanks to Mr. Waller, they've lost access to that ADP data. So what little data they were getting during the shutdown, they're getting even less now. This was apparently, there's no real reason, but Waller before the last jobs report mentioned, he was in a speech that ADP data showed that the labour market was weakening, and that proved to be the case in the last ADP report that we got. And it seems like ADP have taken umbrage with that little forecasting note from Waller, so they've cut the Fed off. Apparently Powell has been trying to get back in their good books, but no luck yet. Now this isn't, as far as I can read it, this is not just the normal ADP stuff we get. It's the whole host of data compilation that ADP do, various metrics that the Fed get with a 1 week delay, and it goes into their models and whatever to help them siphon through the jobs market and what it's doing. So it's a bit of a kick in the teeth for Mr. Powell and co. So even less than we'll be getting. ADP, if we're still in lockdown or shutdown, is going to be the closely watched number that we get. Do we get next week? What's the date? When would be NFP? Let me check my calendar.
Is it not the week 23, 24? No, it must be the week after next,
2 weeks.
right?
Yeah, 2 weeks would be jobs week. So yeah, that's when we need to look at what the jobs picture's doing there. Right, anyway, that's it. Pretty quiet on the old headline front again. Anything else, Kay?
Nothing serious, right? There was this interesting comment about it's actually the biggest local bank in Japan, Yokohama Bank, who said that if they judge or if they get the signal that the Bank of Japan is kind of done with hiking, they would pile back into JGBs. Again, that is not something for now, but it is something to keep in mind because we've been talking about it like literally since Bank of Japan started to hike rates, that the Japanese whales and etc. they've also been really shortening maturities a lot. They haven't been buying a lot of JGBs either. That is also one of the reasons why those long and ultra long JGB yields have been rising. Not only Bank of Japan buying less, but also the big local ones buying less of it. But just something to bear in mind. And if we kind of would accept that the Bank of Japan is on track to do another two hikes, 225 BPs, if they are 25 BPs hikes, and bring it up to 1%, which is widely accepted to be kind of their target zone that they won't move much above. So we may expect after the next second hike that all of a sudden the local players will start to buy more aggressively JGBs again, and that's about it, man.
Yeah, I mean, it's one thing we haven't really talked much about recently. We've been on a page that a hike is coming or a hike is possible. But how many will they do? Will it just be the one and then stop, or will they indicate that they're going to continue if the data? I mean, it's all still softly, isn't it?
Yeah, I'm still at for my own base case. Obviously, it's only my responsibility to think that way. Still, that they are going to take it to 1% and then stop. They can't go much further because of that Japanese government Bank of Japan cooperation. Even if they are independent, we know that the Bank of Japan independency is relative. Okay, they won't completely put the governmental finances in jeopardy. So they're probably not going to go anywhere beyond 1% unless we get like stellar growth numbers out of Japan and I don't know, not only inflation ramping higher, which could be the case, but it's going to have to be paired to for Japanese standards, outsized growth, and which is still remains to be seen, right? But you know what? In general terms, get the yen another 4 or 5% weaker, we may be closer to a rate hike than maybe the market expects. If for those who expect it to be only Q1 2026.
Yeah, that's possible.
I still think December is live. Really, I really think December is live.
Yeah, well, yeah, it's as we've been speaking about anyway. From now till probably, if they haven't hiked by March, I don't know what sort of crap they're going to
Nah,
bring in. So yeah,
they cannot not hike, not hike in the next 6 months. I mean, it's impossible unless Japan implodes in the meantime.
Yeah.
No,
Well,
they can't.
they've had windows where we thought they should have hiked and didn't. So you never know with these
Absolutely.
stuff. It's just the thing.
Absolutely. And the last one was what, June, July, where they had a positive real wages month, and they did last time in the last year December. Right? Can you imagine the last hike is already December last year?
Yeah.
Oh dear.
Japanese timelines for you.
Yeah, exactly. That is what we spoke about as well when they started. I mean, don't think that they are going to go Fed style and hike 1% or 2 or a year, right? No, it's not going to go that pace
Yeah.
in Japan.
Exactly. So we keep watching. That's what makes it fun. Right. As for today, we are getting a bit of data out of Canada. Retail sales for August. So they're still stuck in the summer while we're just about to enter winter. And we get BOE's Dingra speaking later, the big arch dove over there at the bank. And ECB's Lane's probably got another 300-page speech he wants to go through later on. I'll be asleep for that one. But aside from that, no other data coming from the US. All that data is cancelled. So, right, let's start looking at prices then. Oh, that was it. We had the BOJ saying that they think their stock market's overheating a bit. I wonder why they would say that if you look at the performance this year.
Your waiter has a 50K no touch in there, mate.
Yeah, 30,000 all the way up to 50,000. Yeah, overheating? Never. Oh, we've got Mexican inflation, have we? Why has my calendar switched that off again? Tell you what, I have to do
and
it
retail
every
sales
time.
and retail sales.
Where are we? Mexico. There we go.
It's that half-month CPI again, right?
Oh, was it the bi-monthly, whatever they call it? There we go. It's on there. All right, keep an eye on that one. Not that it's moved the peso much these days, but thank you, Michael. Give us something to wake up for. Right, let's get into it. Ali. You've jumped into Euro Swiss as well, have you? Right, I'm not happy with your stop placement right on the big figure. So that might be something you want to consider. I'd had a little nibble when we're doing this down here. It's creeping. Your point of interest, resistance point, is up here, this 55-60 area, because this is the bottom of all these lows that we've seen along here. So we've had a lot, down here. It's been a pretty big level. We've had some major touch points there. We've had some breaks through as well, but we've had some major touch points there. And it already resisted straight after we had the break under. So this is what I'm waiting for, a move through there. If we can't get through there, it's going to keep the downside pressure in play. Yes, we have lows just above 92, but we've also had moves to 92. So your stop right bang on a big figure is not usually the best idea. And the 50s as well, as I learned the other day from my dollar yen trade when I tried to be clever with a 150.50 TP and it got to 150.51. So maybe think about giving yourself a bit of room around that level. But yeah, same side as me. So I'm looking for a move back up above that area there. Dollar CAD, I did warn you what my level was. That one there, it was the break point. It's a historical level. We pretty much tagged it and then we bounced from there. This is still looking weak though. I was thinking about having a little nibble there, but I had to leave my desk, so I missed that. The failure to get back above and hold 140 is what's given me a bit of caution for this one. We looked like we were heading back down there again today, but we pulled up just ahead of it in the 80s, so we didn't put in another retest. I think normally I'd say if we were back here quickly, it's a warning sign, and that still may be the case. But if this level is going to show what it's got, if it's got any gumption, then it will need to hold or continue to hold retests on here. But while we stay above it, it keeps. While we stay above it, it keeps everything above in play. But yeah, it's just looking a bit weaker intraday than it has been of late. So I'm keeping an eye on that one. If we get a break here, then we've got all this zone down here to take care of. So a break may not be that damaging if we run into traffic down here again. And that's also the 38.2 of the last swing move up. So bear that in mind as well. But yeah, Ali, be careful where your placement is. I mean, you may have different levels and you go by your own charts, of course. That's down to you, mate. I can only point out what I see with my eyeballs. Euro CAD. Dimmy, you do like going around the Euro CAD. You got anything on Euro CAD, Kay?
No.
Well, I'll give you a couple of minutes to get something while I talk about something else.
I haven't been really watching it. I mean, CAD has not been loved for a while. Euro is let's say lost some of its mojo as well if you look at the Euro crosses. But so they're pretty much both in a bit the same boat, but it's coming back a bit down, right? Euro CAD since a while. I'm not even sure. I have it on here. Yeah, it's come back down.
Looked at it for a long while. Let's give it that. So yeah,
I can have a look at it if you want.
Yeah,
I have it on my screen. So.
I'll leave it to you. The old Euro has been knocking around an old level that we've been watching for quite a while in our room. This 115.70s. No idea why it's a level, but we've had a lot of action around it going back through the summer. Just one of those levels. It doesn't look big, but when you get there, it does something. Again, it's another one that has broken. We have seen attempts to break, when we've had some big volatile news like this. We have seen moves, and obviously a couple of weeks ago we had this break underneath where we had a double bottom 115.40s before it got right back above again. we've had a first test here. Again, the bounce does look pretty weak. We can't hold into 116. We can't get back to 116.30s, which is another bit of an on-off level. So I think if this one comes back to this 70s, there's probably a chance it's going to break. This is a bit different to what I was talking about in dollar CAD, where if we get a quick return, we need to see what happens. But this one might look a bit weaker if we are coming back, purely because this bounce is just absolutely nothing. But we shall see. There's no real reason why we should get a big move. Volatility is coming off. I'm just looking. Euro dollar 1 month ATMs just above 6%. If we drop under 6%, that's going to suck the roll right out of things as well. It's even much lower than cable at the moment, which is still up 7.10. So euro volatility is coming off big time at the moment. So yeah, just be careful. If we do break under this 115.70s, we might go and have a look at this 40s double bottom down here and see whether that holds or not. I'm still got an eye on the 115 for maybe a bit of a scalp off the big figure, seeing as we haven't been there for quite a while. But I'll judge that move as we get there. I'm not even going to bother looking at euro sterling. That's doing absolutely nothing as usual at the moment. So no change there. 86, 87.20s and up to the highs. That's your range. And do what you want in between. Right, Kay, you got all your EuroCAD chart all set up?
Oh yeah, mate. Oh yeah. Oh yeah. Let's look at EuroCAD. And yes, Adi, Ryan and I are both still long euro sterling, but we also told you that we let some of it go around 87.10, right? Yeah, we have, but our positions are reduced because we don't break any ranges. EuroCAD, yeah, Michael, it is, and Dimi, just let us know. Are you in our room? In our community? You are the Dimi in our community, aren't you? Just let me know. Yeah, okay. Just ask your questions in our community as well, because there's a lot of people watching crosses, and it's always an interesting conversation. And we hadn't had one really on the EuroCAD for a while. But as Michael says, we are a bit of a trend line support here. But I would also add this 161.70. 90. Okay, so from here, 162.10 down to 161.70, it's a double low here, right? I wouldn't say double bottom, okay, because it's not been confirmed, and we're also in a bit of a spike high here. So this whole 50-point zone here should be relatively important, okay, as a support, Dimi. And everybody. But if it holds here, of course, then we could move higher again. As Ryan already mentioned, we have those Canadian retail sales. Since it's the only thing we can bank on for the Canadian dollar today, it may move things around a little bit for the loonie. So be a tad careful when you have positions. But if ever we would go for that 160-170 test, it's going to be a very interesting watch here, because it's also a bit of a retracement level, since we have put in that high, which is a new one, and yet it had already shown up before it became one. So the 160-170 is likely going to have quite a bit of eyeballs on it, okay? All right, let's look at those metals, because it was some day again yesterday. I showed this quite a few times in the room yesterday, and this trend line is really started end of August, when really the ramp higher through from 3300s, yeah, started to up above 4K, and it held. All right, even if I think my touch is not right, it really held. It was around 4,000 yesterday. We're all waiting to see if we would have that flush out. A lot of us were actually waiting for a flush out to get long again, in case it would spike afterwards. But we actually never got below, and that's potentially significant, because it did not only happen. If it would have only happened this kind of move during the Asian time zone, this was the opening of the Asian time zone again, where we had this big drop in gold, and when we came back online yesterday, it was above 4,100, right? Um, and then we had like one and two other attempts, but we never went below 4,000. So that could in itself already be very significant. But again, I will say, so tomorrow we think we have the US CPI out. Is it confirmed, Ryan? The US CPI, right?
Yep, we're
Oh,
getting
okay,
it.
okay, okay. So tomorrow there's the US CPI out. So don't rule out anything. We could have another move to close the week. But I will say this may have been significant, right? Because if you go in different time zones, testing the level, the big zone, and I would really add, as I said, I would really add it down to 3980. Okay, if you go and test those big zones and it holds, that should be telling us something. All right, so I think it's sent a message. It needs confirmation tomorrow. Okay, but that's been a very nice a very nice bounce that we had of those levels. I played it, but just as a snipe, and my snipe was already finished by the time it went up into the 40-40. So I missed all of this, but that's okay. My account is still happy, but it's just it may end up being really significant, this one, because if we look at the fundamentals, nothing has really changed. Okay, yes, the yields are stabilizing. We're back at 4% in the tens, but that's only one thing. We are still new sanctions on Russia, the Chinese and the US. Trump says they will have a meeting, but the Chinese, unless I missed it, they haven't confirmed that the Trump Xi meeting will take place. In the meantime, they are throwing threats at each other, surrounding rare earths and what all chips, etc. Everything is being thrown out now to put sanctions or tariffs on. So there's still the fundamental reasons why they should the metals and especially gold, then I would say, should remain bid are still there. Okay, but obviously we can never say never, right? We can have this washout. But in the meantime, it's still bid on the day. I would say watch that 4160. That's our top of yesterday, and it's halfway of this last jump higher. Okay, it's halfway, could already be enough. Then we have this prior low here around 41.8590. That's probably going to be the next resistance. I would imagine that until we get the CPI tomorrow, we are maybe rather ranging a little bit. Okay, unless the two big forces in the world really uh, go head to head, and their relationship completely breaks off. But that would be a surprise, since Besant and Green are traveling to Asia, China, or wherever they may meet, to try to play a bit of good cop, perhaps Besant and Greer. So I would imagine we are going to trade a bit inside the range, and then after tomorrow's CPI, we will have to see where we end the week, and the story doesn't end there, because then we have those potential meetings or no meetings at the end of next week. Okay, but that's going to be something we need to look at next week, then, to see where we are going into that APEC meeting, and the US-Russia relationships in the meantime as well. Whether Trump and Putin are trying to put up that meeting, yes or no. It doesn't seem like it right now. Yeah, silver is a kind of a different animal, because that, as I said also on the update, the volumes in gold are so much bigger over the past few days, that yes, we had that big shakeout, but this one is on a different mission, or it's different to gold again, and we are inside this range, and I wouldn't really do anything inside 47 and a half, 49, 80, 50, 20, 30 even. Okay, this could just be a bit of a range, and then waiting for the data tomorrow, and also waiting to see what's going to happen going forward to that APEC meeting. But in the meantime, I think we are in about a $2.50 or so range on silver. And don't be surprised if we do both ends of the range before the week is over. We need to look at what's happening in the yen, right? A good observation from Ryan this morning as well. Dollar yen stops at this prior little spike here around 152.60. We are right on it, okay? But the market finds, how shall I say, finds support for everything versus yen right now because of the Takaichi trying to put that package in place, which is going to be a big one, which we spoke about yesterday already. It's also the case that actually a higher popularity rate compared to Ishiba and Kishida is actually helping this as well, because that means that the local voters have more confidence in what she may be doing, and especially if you look at the younger generation, that's where the biggest change was. Kishida and Ishiba did not have the younger voters behind them. Takaichi in turn has. Okay, so she really has those voters behind her, and that's actually helping this move that we see now in yen. So if we get above here, look back to those prior highs. It's probably on the cards, and then you have to zoom out a little bit to see that we are still in that big triangle, and for that one to break 154 we'll have to go, okay, even a little bit higher, 154, 154 and a quarter, but we are not there yet, one step at a time, okay. What's interesting, and I'm going to go for this one on to the long-term one, is this euro yen, because we are again pushing above that 2024 high, okay, and we may be on our way to a test of 179.5. That just looks like the longer term is pointing that way to for a move higher. I don't know what's going to happen once we reach there, because the psychological 180 will be waiting, even though historically it's rather been the 170 and the approach of 190, even if we didn't get there, and that's 30 years ago, right? Even if we didn't get there really over then, but then the euro wasn't even there. That was still the mark yen we were trading in those days. But it does look like it's really supportive to go for a look up there. And how can it happen? Or what's needed for this to happen is this zone here to hold. Prior high, two lows here, and it's all happening in the 174.80, 175.10 zone. For as long as that holds, first we may have a look back at this 177.90, but then it just feels that yen pairs are going to continue to rally unless we get bigger verbal intervention at least, or more. But therefore we will need the speed to be with this move. Yes, it's been moving quite a bit, but this is only a big figure. We need bigger and faster moves, this type of move, to get the MOF out of their lethargy and come and tell us that it's all enough. In the meantime, I think this is still looking pushy. Well, virtually all the yen pairs. If you look at those yen catching up now as well, Kiwi yen catching up now as well. And what are we going to look at? Crude oil. Yeah, it's trying here to break back above 61.75, which was a bit of a line that I've been monitoring for a while. Mark put something up here in our room, and also talking about that oil at 61.75. It is a bit of a level that we need to watch, guys. Okay, so if we get above there, it may be pushing higher. But again, what have we been saying for years now, is that every spike higher has been met with selling. Okay, so 61.75. If we close the day above, it's going to look better for a move back up into 64.5, 65, 65.5. Okay, sanctions, whatever, because sanctions on Russia means that um, people will have to pay up, and they will have to pay higher prices than the Russian ones to get their oil if they want to get it from US, from Norway, etc., etc. And then we're talking about Brent, of course, but the both are going pretty much hand in hand. We see as well that um, Brent is not there yet, but I need maybe to refresh my levels a bit. But still, Brent is not there yet, but it has put in a similar bounce. Okay, so that's in particularly important for Norwegian kroner. I have a position in Norwegian kroner. People in the room will know it. Maybe I talk about it tomorrow or so. Just that it's in the trend of what the market is doing right now, because I was expecting this kind of move a bit higher on oil, and I'm not a huge, but let's say a mild Norwegian kroner bull for the time being. Back over to you, Ryan.
Thank you very much, Kay, and thank you everybody for coming to the Flow Show as always. Hope you're enjoying being here as much as we are. Have a good day, everybody. Take care, trade well, and we'll see you all tomorrow.